The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All righty, folks, welcome to the Diagnostic Trading Hour, and I'm your host here, Darrell Martin, and glad to have you on the show today. And just want to let you know, if you have any questions, give me a call, 877-927-6648. Again, that's 877-927-6648. And one of the things I wanted to let you know, we have this event coming up here at the end of the month, and we are expecting it to fill up pretty fast. So if you're going to be in the Tampa area here on the last Saturday of this September month, go ahead and go to TFNN.com, and right here at the top, click on Free Live Workshop. Click on that right there, and it'll give you all the details. It's going to be from 8:30 to 12, and it's going to be in the Grand Hyatt there in Tampa Bay. Tampa Bay, Florida. And anyways, if you're going to be in the Tampa Bay area, I don't know why I said the other one, but if you're going to be in Tampa Bay, 8:30 to 12 noon, and it's a free workshop because Nadex is putting it on for us. And we're going to have Dan Cook from Nadex. We're going to have Tommy O'Brien out there talking about identifying the trend and trend setups. I'm going to go into some basics on spreads and binaries and go into the whole diagnostic trading formula. And then we're going to go in, and Tommy O'Brien's going to go into setting up the trade. So once you identify the trend, then you got to set up the trade. And then what we're going to do is we're going to go through and we're going to look through various trade setups and how you could place those trades using binaries and spreads in order to have good risk and proper money management. So anyways, hope to see you out there. And like I said, it's going to fill it fast, and it's free. But free does not necessarily mean nothing. I mean, it's going to be huge. And I think you're going to love it. You're going to get to hear from guys that are in these markets every single day. And me and Tommy O'Brien and Dan Cook, who knows Nadex backwards and forwards as well, all of us are going to be out there. It's going to be a great educational experience. And so just again, thanks to Nadex for making it free. Otherwise, we'd be charging quite a bit for that. So come on out and check it out. And all you got to do is hop on the website at TFNN.com to get it. And by the way, if you don't have a Nadex account, on TFNN.com on the home page, or really any of the pages there, click on Nadex. Right there, you'll see a banner on the right side of the page. And go in here and click Create Account. And you get a demo account, $25,000 of funding money. You can start playing with it, learning, things like that. And click on Open a Demo Account. And fill in the information here. Your demo username, first name, last name, phone number, email address. Click Apply for Demo. And you'll get an email within about 15 seconds. It'll tell you what your password is, and then you'll be able to log in. To get a live account, you only have to put in with $100 minimum. Of course, I recommend you put in more, but that's all you have to get in and to get started trading. And so you fill that out. It takes about 15 minutes, and then log in, and you're ready to go. And you can start trading on Nadex right away. So definitely suggest hopping over there and checking all of that out and everything that's coming up. And let's go ahead and do our market wrap like we do every day, just sort of looking at, where are all the markets sitting, and, what does it look like? So on the market wrap right now, what we're looking at is the S&P is up about 4.75 points, and we got the Russell up 6 points. We got the Dow up 3. We got, let's see here, looking at the NASDAQ, it's actually down a little bit now. And oil up 82 cents. It has just been bouncing around like crazy. It fell down, it flew back up. It's just been a massive move on oil today. And silver is up about $1. Copper is up by 3%. I mean, my goodness, it's just been flying. Gold's up 2%. I mean, you're talking multiple deviation days. And gold actually breaking the third deviation level today. Really crazy. Like, I mean, that just almost never happens. So, but when it does, whew, it does. And then you go in, you got a pound dollar, so it's up 79 ticks. You got euro dollar up 159 pips, so just flying up. And it's amazing how much the euro is flying up against the dollar right now. And you go over, and just everything's going on. And it's really after the big ECB press conference that happened yesterday. We'll go in the fundamentals here in a second. And looking over at corn and soybeans, you got corn is up 4.5 points on the day. And you got soybeans basically flat on the day so far. And so that's our market wrap, just looking at everything for you. And now let's go into the next part here. We're going to diagnostics. We have to go into the fundamentals of what's going on and keeping you informed so that you're staying on top of current market analysis. And in diagnostic trading, we like to look at several things. One of those things is fundamentals. The other one is statistics. The other one is technicals. And the other one is seasonals. So what is going on? Fundamentals really are the driving factor on the the economy right now. The announcements that are coming out, and it's not really fundamentals. It's government fundamentals, and eventually, hopefully, one day they'll get out of the way. And and I mean, don't cross your fingers, but and things will go back to normal, and whatever normal is nowadays, and we'll be able to actually look at companies and see things as they are. At the end of the day, though, you just got to trade the charts. And yesterday Draghi came out and he said, he said, hey, a few weeks ago I said I couldn't do anything, and you know what I'm telling you today, we're going to have no cap on how much bonds that we'll buy for any country in the euro. There's no limitations, no exclusions. We'll spend as much as we need to. And then he sort of puts in, underline quotation marks, small print, as long as they accept the requirements we give them. So nobody really paid attention to that part. Pretty important considering like Spain and Italy and France have been, basically saying we're not going to really accept any additional requirements from you. But nobody paid attention. So it's the news, and it's so people just heard, hey, they've finally done something. They're going to buy unlimited bonds to keep this down. And so of course everybody goes in and they act on that news. They don't go on what happens when it does spike up if we don't buy into it, and then they don't give in, and then of course they don't buy the bonds. So, I mean, it's just really, completely a mind game. And so with that, and what's really funny is the euro's rallying, and he's saying, we'll print unlimited money. That doesn't even make sense. But the big reason is the dollar's getting crushed right now, okay? Everybody's expecting QE, and, one of the big, we're talking about the big thing that was going to happen this morning, that did happen this morning, was the employment change and the unemployment rate. Basically the non-farm employment change and the unemployment rate coming out. And people expected at least 123,000. We need at least 150,000 being added on just to keep up with population growth. So that's obviously well short of what's needed. Really, we need about 180 to be able to make a dent. And yet the unemployment rate dropped to 8.1%. And I guarantee you right now, there's people reporting on the news how the unemployment rate came down to only 8.1%. It's dropping. The economy is coming back. So, again, that's looking at the number and not understanding the number. Okay? It dropped to 8.1 because a ton of people have dropped off, and they're no longer reporting. So, therefore, there's less people reporting unemployment because they're not collecting unemployment. So the numbers went down, despite the fact that the reality is the numbers went up. But people are hearing, hey, it went down. And again, it's what do they hear? And so at the same time, the people who know what's going on go, wow, that's bad. So it's went down to 8.1 because so many people have dropped off. Now I'm sure you're going to hear Obama saying, hey, I got the unemployment rate down to 8.1. Not that I got more people jobs, but I got the unemployment rate down to 8.1. And his big goal, of course, is to get that thing down to 7.9 before Election Day so he can say he dropped it below 8% because he promised it wouldn't go above 8%. So, of course, it would be nice and convenient if he could say it was below 8. Again, that means nothing as far as actual people getting jobs and people unemployed. It just means how many people are reporting there. So, anyway, he's got that unemployment rate at 8.1. And people who know what's going on go, wow, well, non-farm employment change, horrible. Unemployment rate, horrible. Bernanke said that extreme measures are definitely warranted, and he's concerned, and they're willing to take action if needed. When he was speaking on Jackson Hole last week, and so therefore people are like, hey, that means QE. So a good number means the market's doing well. The market goes up. A bad number means QE. The market goes up. However, why would Bernanke need to use the QE card when the market's going up? Okay? There's really no good reason for him to use it. The market's already being, the dollar's already being deflated, right? Dollar's going down in value. That's why gold is, costing money. So he already has inflation. He has QE without spending a dime based on a press conference. So just sort of like Draghi, he had euro strength without buying a single bond based on a press conference. Okay? So what's really going to be interesting is, my prediction is he's not releasing it. It's not popular with one of the candidates that's up for presidential election. Is it even needed when the market's made this massive rally over the last couple months and all these expectations are there? The only reason I could see him stepping in is if on September 12th, the German Constitutional Court is going to be making a ruling that it'll come out somewhere around 4 a.m. or so. It's going to be making a ruling on whether or not the European Stability Mechanism is constitutional. And that's basically the permanent fix, I guess you could say, to the euro crisis. And it gives them a truly unlimited printing press. So it sounds like Draghi's already made one. But it gives them one where they don't have to have all these conditions. Okay? And makes it very, very easy. Of course, all the countries have to modify their constitutions, literally, okay? Because this would be changing the entire EU structure from when they joined. So basically, they're going to decide whether or not now, and if they decide it is constitutional, they can't change their mind. It's done. They can't reverse it. If they strike it down, that is going to be big bad news. Okay, because that's the permanent thing they're trying to get in place by January 2013. And a lot of leaders, such as in Germany, the president over there wants to get reelected next year, and chancellor over there, so she's trying to make things happen, and her election come up in 2013. But if that doesn't happen, it's going to be very bad news. It means, wait a minute, if that didn't hold through, if Germany knocked that down, it's really funny because you barely see it in any headlines. I mean, you have to know it's out there to be looking for it. And but it's so big that Bernanke actually moved his Fed funds rate. Go back and look. He has reported for at least the last several years, every time on a Tuesday or Wednesday, every single time. Okay. And he's reporting on Thursday. He's waiting until after this Constitutional Court ruling comes out. And so that is going to be the big nut thing. And if that blew the market up, then that could be his justification of doing that. So he cited basically several things. Inflation hasn't been an issue. So he's getting inflation right now. I mean, you got gold flying up and everything else. Food's been flying up, all that stuff. So, that can create a bit of a trickle down issue, and so that's the issue when they print money is, of course, fear of future inflation. So that one's sort of balanced out. I guess he could try to make that. I'm sure he will make that argument. Unemployment being the second leg of the reason to do QE, and obviously there's warranty there, except for the fact that he could quote 8.1%. I don't know if he would actually do that because he usually does at least call it like it is. This is bad. This is good. Whatever. And then the third leg is the issue. We'll go ahead and we'll get back to the third leg right after this commercial break. Hold it right there.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, this is Darrell Martin here, back with the Diagnostic Trading Hour. And we're talking about basically the three things that Bernanke's been looking at. Well, he's looking at inflation. Well, he's got inflation just by talking. So with the dollar being debased, that makes everything else go up, and gold costs more, oil costs more, et cetera, et cetera, et cetera. And he talked about the resilience of the economy. Well, I mean, you got the market at least flying up, so that sort of goes with that. And then looking over, we were talking about unemployment and that being part of the economy there. And unemployment, obviously, that's an issue. So we'll see if he calls it like it is on the 8.1%, and I'm sure he will. But the third piece is the ongoing instability in Europe. And with, I'm sure Draghi and Bernanke are doing, tag team here. With Draghi's announcement and with Bernanke's announcement a few days before, remember, Draghi didn't say anything. He actually skipped out on the Jackson Hole Conference, which was like the who's who, annual conference that every major, financial guru of every country shows up to every year. And he didn't even, not only did he not go, but he had a press conference scheduled for Saturday, the day after Bernanke. He didn't show up. So, because he had things to address. And basically he put stuff together as if he couldn't have, flown over, flown back, whatever. But he wanted the impact of what he was going to say to happen all at once, and it didn't. And so with that, there's some stability in the euro. You got inflation going on. You got the market running up. And why does he need to do QE? QE, obviously is not helping anything, except for just the expectation of money going in the market. and making it basically less valuable to have bonds. Therefore, people, and this is probably the number one thing about why they kept the interest rate really low. Is because if they make it painful enough to have a bond, because your interest rate is basically negative of inflation, then you're losing money when you buy a bond. And therefore, the only way that you can have your money grow is to go out and actually put it into a riskier asset like the market. So low interest rates force people, basically, without forcing them, but basically it forces people, if they don't want to lose money through inflation, all right, to take on a riskier asset class and put their money in the market. So it's a very interesting psychology strategy where they're basically making it expensive for you to not put your money in the market. Of course, it could be very expensive if it falls down. I think we're going to see some pretty major things be happening next week. I think the market's going to pull way off of these highs. But we'll see German Constitutional Court. We'll see what happens with QE. Either way, I'm going to be trading with very limited, very defined risk over in Nadex, and you want to make sure that you are doing that, okay? Limited risk, high leverage, all right? And with the spreads over on Nadex, you not only get that limited risk, and when I say limited, I don't mean like you have a stop loss and you get stopped out, therefore your risk is defined. I mean you don't have a stop loss and your risk is defined and you still get massive leverage. So if you go in and something I did at here literally just an hour and a half ago, right as the end of the bull bear binary hour, I was talking about I think the market's basically hit all of its highs, and I went short on gold, on Eurodollar, on the S&P, and on Aussie dollar. And I don't expect a major fall today. Okay, I don't expect them just to really fall a lot down, but I really don't expect them to move up anymore. And at the same time, I'm selling after a massive 1, 2, 3 standard deviation move on these different markets, and so that can be very dangerous. And so if I'm going to do that, I'm not going to go in and sell the futures. I'm not going to go sell ETFs. Okay, I'm not going to go put a fortune down on options. I'm going to go in and I'm going to do the Nadex boxes. They're very unique contracts, and they work extremely well at helping you limit your risk while giving you a definite edge in profit potential. And the other trades I'm going to do is, right now I think the market's going to be a little bit flat, is I'm going in and doing binaries. You can do some of the trades I did were just literally I just did at the money binaries. Risk $50 to make $50. Okay? And if the market goes up, I lose 50. If it goes down, I make 50. If the market stayed flat, I'd make 50 based on the binaries that I chose. And so it's pretty nice. So down 50, flat 50, up. The most I can lose is $50 on the trade. And, there's other trades you can do too. We were looking at that as if you didn't catch the bull bear binary hour this morning, definitely go back and watch the archive, because I was showing, and we were discussing, me and Tom and Steve Rhodes were going into just the amazing volatility that is in the binary options, even when a market is flat. And you're talking about within a 5 or 10 minute period, a trade going from $10 to $30 to $90 and back down. And so you can hop into your trade. You can be literally up and down trading that trade multiple times for $20 to $70 to $89, making 2-3 times your risk and reward in a matter of minutes, even when the market's barely doing anything. So it's a very, very cool thing to check out. If you haven't checked them out yet, definitely check out that last bull bear binary hour archive. Stay tuned right here. I'll be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome to the Diagnostic Trading Hour, going into the last half hour here, and we wanted to go ahead and wrap up. We're talking about a little bit of fundamentals, and last I was talking about the non-farm, the employment, and everything else that's going on with that. We had a few other announcements come out overnight. Britain had actually some good reports come out on their PPI input, their manufacturing production, and so that's very, very, very positive for Britain. That came out. That, of course, helped them and their currency last night. So along with just everything else happening in the euro, because what's good for Europe is usually good for Britain since they're neighbors. Anyway, so those reports came out and helped them, and had a nice big run. And let's see here, I can pull that up and just sort of show you that real quick. And we'll zoom on in here to the intraday, and you can see that they got a nice little on that. That report came out at 3:30 Central Time, and so we can see, came in, came up, boom, turned around, and just flew up all morning long. And so, the end game, basically, it really did work out well for them. And then Canada, they had some reports come out this morning, so we can check them out as well. And their reports, they had building permits came in worse than expected. Their employment change, they came in actually a lot higher than expected, so a lot more added. The unemployment rate stayed the same. So that went good for the Canada, it's U.S. Canadian, right? So when it goes down, the Canadian dollar is gaining, the dollar is losing. So with the dollar losing, and along with Canada getting some good news in combination with that, that just added more fuel for them, and all those reports came out right at 7:30 for Canada. And so you can see this right here. So not only did you have the Canadian reports coming out, but you have all the dollar reports coming out, and dollar getting basically crushed in the process. And this led to a pretty major move over there on just about every currency. And then they had one more report come out at 9 o'clock. It's called the IVPMI. And again, that's 9 o'clock Central, 10 o'clock Eastern. And it's they go through and they survey, we were always doing all these surveys, right? All these economic reports, they survey 175 purchasing managers and basically ask them what they think about employment, prices, supplier deliveries, inventories, things like that. And it's a big leading indicator of economic health. And basically, it's just the PMI. So, but it's their version of the PMI. And they'll be, over there, let's see, I think this has already happened. Yeah. The governor over the Bank of Canada is actually doing a little speech today, too. Mark Carney, he went out and he had a little bit to say. And that came out. He started talking around 10:40 and hadn't really had a big impact, overall. But he's the head of their central bank. And if you want to see the latest release there, you can go over and you can check that out. And that's right there on bankofcanada.ca. And you can, under publications and speeches there, you can go in, you can see all the remarks that he made, what he said today, and the details on that. But he's the one of the Bernanke over there, right? And anyway, so got that going on, and then looking at a few other things. Check this stuff out in oil. This is just crazy. This the move. I mean, look at this. Oil flies down. I mean, what is that? That's a $2.60 move, and flies right back up. I mean, $2,600. Okay, I mean, just amazing. And if I go over and I pull up my deviation levels here, we'll see what we got going on. And these will be available for you to be able to check out pretty soon on our site. And the deviation levels for the crude oil on the way down. Let's see, where did we go down to? We went down to 94. And we had a deviation level on oil of 94.20 and then 94.63. So you'd start tightening up at 94.20. And I guess that would have been a good time to tighten up, because then it turned right back around, went on, back up, and just pulled right back. And then what did it do? It stopped out. It's like, most things right here about this time, as we finished off and started pulling back. And also, I mean, now this, talk about the mover of the day. Gold takes the cake, all right? If you were in this trade and you're long the futures, man, bravo. Literally, you're talking let's just, from that, big, from before the report, 1,700 up to 1,745, okay? Massive move. So $4,500 on a single gold futures contract. And what I'd like to do is show you, this is sort of a cool thing. I want to show you how this could have played in your favor if you went in and you traded gold on this news report. So what did that mean? And really what's happening is everybody's buying, they're going in and they're exchanging a lot of their euros for gold, and that's causing gold to rise like crazy. But the euro is still gaining strength because the dollar's getting crushed. Part of the euro gaining strength is, hey, the bond thing, but because they haven't actually spent money yet. When they do, that'll kill the euro. But the other part is really just the dollar getting crushed in the process. And so that's really what you want to be looking at. That's why the euro, rallied, is because the dollar got crushed, because they think we're going to be printing money next week. So we'll see what happens. We may, and I'll play it either way. So I'm not locked into a position. I can have my opinion, but at the end of the day, the chart tells me what to do. But if we go over here and let's check out Nadex and let's go. Okay, gold was at 1,700 this morning before the report, and let's see. Oh man, I don't have it open anymore. Okay, so on gold, so it would have been up there, but it's closed out for the day. You could have went in and you could have got in like a gold spread for about, I'm telling you right now, there would have been some about 1705, okay? But you could have went in and you got, 50-point wide spread there. You're talking a $450 profit on a $50 risk on gold, which would be nothing, all right? And if you did 10 of them, $500 risk, well, that's nothing. That's not a big move. That's a 5-point move against you on gold, but $4,500. So you could have went and you could have played this trade. You could have played these big moves, and we have some other big moves. They're not all over, right? We got the stuff coming out next week with the German Constitutional Court. We got the Fed funds rate. You want to talk about a gold play, okay? There's your gold play. You know, when that comes out and they say yay or nay QE, that's the time, and I know what I'm going to be doing. I'm going to be straddling gold, okay? I'm going to be straddling it on the spreads. I'm going to be straddling it on the binaries. I'm going to be straddling it like crazy because, I mean, that announcement is going to have such a massive impact on, you know, the QE, yay or nay, is going to have a big impact. And you know, I fully expect that we're ready to act as soon as we need to announcement, and that will delay the, you know, low interest rates out to 2015, so that way we keep punishing you for, you know, putting your money in a safe place, so that way you don't put in a riskier asset speech. That's what I'm expecting to come out. But hey, maybe the guy's going to come out and go, boom, QE, let's be preventative, and let's just knock this market through the roof. And if he does, great. But I mean, there is an adage, and I'm sure you've heard it a million times, and that's buy on the rumor, all right? Sell on the news. So get ready. Anyways, and you know, it's not that I'm just bearish on the market totally, but you know, come on, you know, it's been running up on rumors and more rumors. It has not been running up on action. It has not been running on reports. It has not been running up on good fundamentals. So, and that's okay. You know what? Ride it. Go with it. It doesn't have to make sense for you to go with the trend. Go with the trend. But eventually, that runs out. And, you know, whenever things come to call. So, is QE going to be there? Is employment rate going to be there? Are the Republicans going to win and, you know, axe the budget? Are the Democrats going to win and blow up, you know, the currency? Is Congress going to let everything come to a head and completely, you know, blow everything up by not figuring out how to deal with the budget deficit? Because one, they built we got that whole deficit financial cliff thing coming up January 1st, where they're going to be cutting spending across the board, which will be a massive negative impact. And they didn't do it in a wise way. They just put it out there. And that was the reason. That's how they actually got the spending limit increased last time. Remember when we came to the brink of disaster back in June, you know, last year there, and they averted it by doing this bogus, you know, thing, and they actually made it. It amazes me. They made it to go through January of 2011 when it went into effect, or 2012, or sorry, I keep going, 2013. They know they're not all going to be in office from the elections. So make it easy on everybody and put the thing out to like April of 2013. If you're going to pull this kind of crap, put it out to April of 2013. Okay? Let everybody get elected, let people get sworn in, and then let the party in control handle it how they want to. All right? So let the people choose. But don't put it right in the middle, like, you know, a month and a half after the election while everybody's on Christmas break, which is what's going to happen. And there's no way they're coming to an agreement. And, you know, even if they get control, they're not going to be in office. And the ones going out are going to be like, you know, forget you. And, I mean, it's not going to be pretty. Now, I know what's going to happen is the Fed's going to come in and due to extraordinary measures, we can buy a couple months. But why? Why does it have to happen that way? So hopefully the Americans will make up their mind one way or the other. I know which way I'm voting, but hopefully they'll make up their mind one way or the other, and so we can get some, you know, just here's how it's going to be. If you don't like it, there's countries with a lot better tax rates, or if you don't like it, there's countries with a lot better benefit plans. So whichever way you want to go, just let's get a majority and get it done, and get the government out of the way. So let's let free enterprise take over. So you know which way I'm leaning. Anyway, so yeah, you got gold, and it just ran up, and it blew through the deviation levels. And, you know, I've seen it. We've had a few of these days this year. There was, I want to say it was earlier in the year, and I have to go back and look at the charts. I could probably even pull it up. It was like 100-point move day in gold. And let's see here if we can, let's remove all the studies here, and we'll check it out. Let's see. There we go. Delete all studies. Yes, get rid of them. Thank you. Okay. So now we're going to go over here and, was this it right here? 1794 into 1688. Yeah, there we go. So yeah, early February right there. 100-point move in gold. So one of the strategies I teach, you may want to have to go back to the archives to check it out and look at it. It's called the Ultimate Hedge Strategy. And it's where you go in and you buy the future and you hedge it with Nadex. Okay? So what you would do like on something like this is you'd actually go in and let's say you thought gold was going to go up or down. All right? Then in this case, let's hope you thought it was going to go down. If not, you still have it hedged, so you're protected. But if you thought gold was going to go down, you would sell a gold contract, okay? And then you would buy 10 Nadex spreads. And that would basically give you $100 for every 1 point move. Like that's how gold works. Every dollar, $1 change in gold, every dime change in gold is worth $1 or $10. So every dollar change in gold is worth $100. And so you need 10 spreads. So that way, you basically make $10 for every 1 point move, or $100 for every 1 point move. And so if you buy 10 spreads and you sell gold, then you have no limit on how much you can make in the direction, and you have a huge hedge. Like on one of the trades I did, it was like literally a $50 hedge, like my $50 risk on my trade, and I had unlimited. I didn't have unlimited. I had $4,950 of protection. Okay, and had a $50 risk on the trade. So that was my hedge trade on gold. And you can go in on this, you place this trade, then literally you can make all 10,000. So the spreads by themselves have a cap, like $500, or if you attend them, $5,000. But if you do the hedge trade, that's where it comes in when there's going to be these big moves and you want to take advantage of this massive multi-deviation move. And you really have to go like 2-3 deviations before you max out the spreads anyway. And that's very rare. But if you think that's going to happen, then you go in and you do the hedge. You put the risk. Now, understand you have to have the drawdown in your futures account while you have the money making in your Nadex account. So you have two different accounts where you're moving. You have to move money back and forth on the next day. But your net balance is going to be down $50, like if it loses, or $100, or whatever the difference is. And it's really easy to figure out the risk on the trade. Where you buy one and where you sell the other, difference is your risk. So if you bought gold at $17.40 and you sold the spread at $13.99. Then you have a 1 point risk, and 1 point is worth $100. So you have a $100 risk in the trade. That's it. That's where do you buy one? Think about if you actually bought and sold and that was getting out. How much money would you lose? Well, that's how the hedge trade works. If you bought and you sold at these two prices, what would be your loss? That's your maximum risk when you do the hedge, up to the point where the hedge goes in. So if the hedge went from say 1,700 to 1,750 or whatever, then you got in at 1,700, then it hedge you up to 1,750. So, but there's literally a $10,000 a day move in gold that's happening in this past year. So who knows? We saw a pretty big move today. Not a $10,000 a day, but we definitely saw a big day. And my deviation levels showed gold hitting at let's see here. Let's go in and zoom. 1743. And so if I zoom in on the day, what did we get? We get 1745.4 was our high on gold. So it stopped right at that third deviation level, which is considered to be 99.5% of the most movement that's expected. So it actually broke just barely out of that. So it basically hit the 100% movement expectation. So that fourth deviation, and pretty crazy. But you don't see that often. And anyways, it chilled out. It went flat, and we'll see if it goes back down before the day's over. And then we go over and check out Aussie dollar. That was one of the ones I was checking out earlier, and it has flattened out right around 10 o'clock. I said, hey, I think the market's pretty much made its highs. It went up, it spiked it by a couple ticks, but then it's come back down, and now it's just flat. So we'll see how that one's up. Stay right there, folks. So we'll be back right after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome on back to the Diagnostic Trading Hour. And, pretty much flattened out since 10 o'clock. So I called it right there at the day, and 10 o'clock a.m., 11 o'clock Eastern. And basic signal that I use every day, and it's been sort of doing that pretty frequently here for the last month. It's been interesting, where we get like a flat reversal at that point. But anyway, so let me check things out here. I want to go over a few things for you and look at next week. Sunday night, morning, whatever you want to call it, nothing going on. Monday, boring, no news. It's going to feel so weird after the last couple days, right? And then Tuesday, basically really nothing of anything huge coming out. I'm looking over every report here that we got going on. And on Tuesday, we got the trade balance. So that'll be like sort of the one number. The trade balance is basically the export demand and the currency demand, and how they come together. So basically it impacts production and prices of our manufacturers here. And but yeah, so not a whole lot going on there. And then Wednesday, we know we got there, right? So we got the German Constitutional Court ruling. Okay, huge issue, and you definitely want to be on top of that. I'm going to be keeping you up to date, step by step. We'll go into a lot more details next week on this ruling. And there's a lot of different ways that you can play it. So that one's right there. And then going over, there's going to be the cash rate, the rate statement for New Zealand dollar is going to be coming out next Wednesday. So if you like to trade, what is it? I don't know, Kiwi. Anyway, the New Zealand dollar there, you can go over, you can trade that one. And then if we go over and look at Thursday, you're going to have the FOMC statement. You're going to have unemployment claims in the morning, PPI in the morning. Italy is going to have a bond auction. And so that'll be coming out. That'll be important. That'll happen overnight on Thursday. But the FOMC statement at 11:30 and Central, and then of course it'll be 12:30 Eastern. And so that will be a big one. Will be coming in, I guess, right after that. So, we'll be able to talk about that, watch it, see how it's going. And they're going to go on. The next thing is they have the statement at 11:30. Okay, and they actually start their conference the day before, but they'll come out with their statement rate. But then they're going to come out with their economic projections at 1 o'clock, and that's 2 o'clock Eastern. And then they're going to have their FOMC press conference at 1:15, 2:15 Eastern. And that's always broadcast on C-SPAN, and even better, get the right to the bottom line commentary right here on TFNN.com or listen on TFNN.mobi on your mobile phone. And then on Friday, we're going to have core CPI, retail sales, and the University of Michigan Consumer Sentiment Report. So it starts picking back up, and then there'll be a big Euro group meeting happening next Saturday on the 15th. And so they're going to go in, and basically the Euro group is going to come together. They do it in Brussels, and it has the Euro group president, the finance minister from each Euro member state. It'll have the commissioner for the economic and monetary affairs. It'll have the president of the ECB, Draghi, will be speaking there, and they'll discuss financial issues, support mechanisms, government finances. It's closed to the press, so it's sort of like Euro's own little Jackson Hole conference, but just for Euro. And then they come out, they talk to the reporters. Obviously, that won't have an impact on the market on Saturday, but what's said will have a big impact on Sunday. So expect a lot of covering to be happening on Friday before that meeting. And it'll be very interesting to see how that comes out, the 17 Euro meeting, because they're going to be responding to how Germany just talked. So they're having this meeting right after Germany has their ruling on Wednesday on the 12th. Anyways, I hope y'all have a great weekend. Enjoy it, relax. It's been a crazy end of the week, and I will see you on Monday.